Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. On Thursday, the Australian dollar lost its upward momentum and retreated from its crucial resistance level of 66.30, coinciding with the 60-day moving average, which we can see here, which has been challenged over the last 6 consecutive days. In light of the retreat, the market is now focused on the support level of 65.45. A key point, as while this level is intact, the market overall is still expected to hold towards the top side objective of 67 cents. Meanwhile, the US dollar, or the USDXY, strengthened to 103.40 overnight following the producer price data, or the PPI, surpassing expectations. That has sparked uncertainty about the timing of the Federal Reserve's initial rate cut. In February, the producer price index, or the PPI, rose by 0.6%, with the core PPI, excluding food and energy prices, up by 0.3%. Earlier in the week, consumer inflation, or the CPI, remained persistent, that is, slightly higher. Meanwhile, the US retail sales increased by 0.6% last month, but fell short of the 0.8% forecast. And also, initial jobless claims in the US dropped by 209,000, beating the forecast of 218,000. Looking ahead to the Federal Reserve meeting next week, a rate cut is unlikely, with expectations for a rate cut still holding in June. However, this has somewhat diminished slightly due to the recent inflation data. Moving on to the euro, we can see the market has plummeted and now pressures the level of 108.70. If we see a close underneath there, would give further indication for the slide to extend to 108.0515 and reassess from there. Although I'm not initially bearish, I am a little bit cautious due to the overnight fall, but market bulls may view this as a potential bullish opportunity and see a rebound and eventually reach its objective around 110. The dollar yen edges higher after the fourth consecutive day and breaks through the top side level of around 148.15. From the break, the market is holding somewhat firmer, with the RSI breaking through the midway point, and that gives a view up to 148.60-70. But looking at the current pattern though, I still feel that renewed demand should run into heavy supply, and therefore from 148.60-70 expected to climb back towards 147, and the objective still holding at 146.35.45. Viewing the sterling, we've got an engulfing candle that's given some concern to the bearish case, and a close under 127.20 would give further indication to the downside and look towards the region of 126.15 to 65 area. Like the euro, could give us an opportunity to find demand from that bottom side of the range if we do see a slight further extension to the slide, and then expect to see a bounce, and then eventually reaching the upside objective around 129 to 130. A whipsaw price action in gold also found the market a little bit to the weaker side and still holding above that key level of 2,144 to 46. I do anticipate further weakness into the day, but we may see a bounce off this level, eventually see a rise up towards that top side around 2,200 and reassess from there. The bulls still gather for oil as we extend into the second day, and now claims at $81 a barrel, its first objective given by this inverse head and shoulders. The measured move is up to $83, which I still feel could be achieved, and therefore any pullback likely to be shallow, and viewing the support now around the level of 78.5. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report. I hope you enjoy the great start to the new weekend.